A trader I know opened one small position on Eurodollar, watched it move less than a single pip in his favor, and still saw his account down real money before he had even had a chance to be right. That is not a glitch. That is Forex trading with one piece of information missing, and by the end of this video, you will never be missing it again. Let's call him Alex. Alex believed the euro was about to strengthen against the dollar, so he hit buy on Eurodollar. The instant his order filled, before the chart moved even one tick, his account already showed a small loss. Alex sat there thinking, wait, did I buy the wrong currency, or is my broker robbing me? Neither. Something more basic was missing from his understanding, and it is the exact thing most new traders skip past because it sounds too simple to matter. To understand what actually happened to Alex's money in that first second, we need to back all the way up to what this market even is. Forex just means foreign exchange, and it is the market where currencies get bought and sold against each other around the clock, 5 days a week, all over the planet. It has no single building, no opening bell. It is banks, funds, and traders like Alex, all in one giant network. And the size of it is genuinely hard to picture. More than $7 trillion changes hands in this market every single day. More than every stock market on Earth combined. But size is not why we are here. Alex did not lose money because the market is big. He lost money because of something much smaller. The actual mechanics of placing one single trade. So let's shrink all the way down to that one trade. Here is the one idea that unlocks everything else. You can never trade just one currency alone. Every single Forex trade is a bet on one currency against another. You are speculating that one will gain strength while the other loses it, and the gap between them is where your profit or loss comes from. That gap has a name, the exchange rate, simply the ratio of value between the two currencies. How much of currency B it takes to equal 1 unit of currency A. Alex was not just buying euros. He was buying euros and selling dollars, in the same click, at the same instant. That is the part almost nobody says out loud, and it is exactly where Alex's confusion started. Look at how that trade is actually written on your screen, euro/dollar. The first currency listed, euro, is called the base currency, and it is always fixed at exactly 1 unit. The second currency, dollar, is the quote currency, and its number tells you how many dollars it takes to buy that 1 euro. So when Alex clicked buy on Eurodollar, he bought 1 euro and paid dollars for it. He was never buying dollars, he was spending them. His whole confusion traces back. Remember, context beats the pattern. The stop is what saves you, and nothing replaces practice on a live chart.